Okay. All right. Right. Good morning, everybody. This is Kel. All right. So let's start our morning MAO right now. Okay. Here we go. All right. Today is the 5th of April, Monday. All right. I mean, 3 days holiday goes so fast. Indeed, I also feeling the start of the holiday, and then after that, now we are back to work again. Now, this morning, once again, I was up pretty early, getting myself ready. Got a bit lethargic, but still, there's a lot of information to share with you today. Let's begin. All right. So April is the big bull market. Apparently, it's all right. April is known to be the one that usually goes up. That means the market will climb quite a fair bit in the month of April. Okay, so please take note of this April month. Yeah, based on seasonality pattern, April month is always known to be the big bull market. But the thing is this: prior to that, usually if the April month is a big bull market, we do see that January, February, March, the market will be sideways or a bit downside. And then April and May goes higher. And then that's where you have your sell in May and go away. Because to sell in May to go away, obviously you need the market to end at the high side, right? So this is the point that I need to stress. Is because either that we're going to see an even crazier April, because since April is a month to buy, we see even 35,000 coming in for the Dow Jones. Okay, do take note of that. But on the flip side, the January, February, March itself, right, the market had been quite steadily on the way up. So it seems that the market is buying ahead of April. So this is where you make your own decision. You make your call from here itself. Okay. So let's continue and share with you more. Now, of course, this is just a joke only. It's meant to be a joke. It's April Fool, right? Now, last time we used to play pranks on people on the 1st of April. It was April Fool Day. But the thing is this, nowadays, lesser people play this. Why? Because end of the day is that after you play a prank on someone else, you still have to, say apology to that person and then make good of it, and hopefully that person forgive you and stuff like that, right? So that's why nowadays lesser people play prank, because they feel like it's just a bit of waste of time doing all this. Okay, it's not because of the it's no longer the fun part itself. It's just like more like I don't feel like wasting my time. So this is what is happening right now, and this guy said that there's no inflation, but obviously we know that inflation is creeping into the market. All right, how do we know that? Later on, we see the news, the global news, you can see very clearly it's everywhere. All right, so let's motivate one another first. Okay, the difference between a good day and a bad day lies in your attitude. So I always say this, right? No matter how bad I have this morning or last night, whatever, every morning before I do my MAO, I get myself freshen up. I can say, okay, brand new day, trade accordingly, plan accordingly. So that is the reason why every day I'm always in this joyous mood to share things with you, because at the end of the day, I really want you to get the best out of it. Because, thing is this, very important. It's not about afraid of failing, right? Failing in the life is very normal. I think somewhere I read my Facebook article. I will reply to all the messages later. I thank you guys for doing that. But the point I'm trying to say is this, all right? I don't want to stay the same, right? To me, is that, right? I believe that we are able to go and climb a higher height. All right, if we keep on afraid to fail or just prefer to stay status quo, then seriously in life, you will not able to scale the height. That's why we are trying to go even higher, right? You can see that's why we do so many events and we keep on promoting ourselves. Now, before we start this morning MAO, do understand this. You must know your current financial condition first, all right? Because I don't want you to get swayed by me, and then after that, you get yourself in the wrong side of the market. And unfortunately, if you do not know how to control risk, then things go terrible. Then we will have a little bit of unhappiness going on. So which I really doesn't want that to happen. So really, guys, I need you to help me on this, okay? All right. So last Saturday and the previous Saturday, we have a resounding success. All right. Basically, nearly about public member, I think about nearly 70 people dropped by and attended the workshop. It was fantastic. We have a really good one. Winston was really all out last Saturday. He shared more than an hour plus on the cryptocurrency market and gave so much evidence that to see how crypto, especially Bitcoin, to climb higher. All right. It was very, very, very impactful. Okay. And of course, you can see that our Trade with the Boys, we always try to give you a t-shirt so that you can remember us. That is how we grow in our journey, okay? All right, also all these are 2021 t-shirts, okay? And for myself, right, I also share why the indicator like KSI, KCX really, really works, okay? So I already explained to those who attended all right, that why I see next 6 years, okay, there will be a very interesting run in the cryptocurrency market. And if we can capture this properly, the next 6 years, all right, the downs and the ups, then I think there's a lot of money to make, all right, loads of money to make. So for those who can't make it or couldn't get the tickets, okay, don't worry. We're trying to edit the video. But unfortunately, last Saturday video got a bit of problem. The recording was okay, but the audio went down. So that means that we will only revert back to the first one. So you will get to see the one that we shared with Yao Tong around. All right, so that is the one. Okay, not much different, just that you miss out just the Winston part because he added more on last Saturday. Okay, all right. So nonetheless, it's all right. It was a resounding success. I just heard that Winston may actually help us to give us a new recording just on his segment alone. So this is a great, man, for Winston. All right, so great success. Thank you guys so much. Appreciate that. Okay. Now, okay, hold on. Okay. Now the thing is this. Of course, we're still going to continue our this trade with the boys system sharing. So on 17th of April, which is about 12 days from today. So on 17th of April, Saturday, we will have our next TWB system preview, okay? So now we have about 526 people around there, all right? Or 28 or 26 people. Let's break the 550 mark, shall we? Let's break 550 mark. If everybody just bring one friend, I'm sure we'll cross the 550 mark. But of course, I understand that, right? Some of you have brought in many friends already, so you all are still trying to help them. For the rest of the people, right, if you think that we've done a great job or you want to share this great, joyous system to them, please, when the landing page is available, register them and then let them come in. And of course, at the end of the day, if they come in successfully, we will also reward you with the this referral fee. All right. So it will be on next Saturday, okay, 17th of April at 10 a.m. sharp Singapore time. All right. Of course, we usually come with a little bit of sharing of the market views first before we go into the system. But still, end of the day, it's all about system. We want you guys to be part of it. Okay. All right. So next Saturday, take note of that. All right, so now let's look at the US economy. Wow, it's incredible. The US manufacturing sector index races to 37 high in March. I mean, seriously, my point is this: during Donald Trump time, you don't see all this phenomenon. But incredibly, in Biden administration, which just only 3 months down the road, okay, wow, it is at 64.7, okay, so much higher. It's like since December 1983. Wow. I mean, if you're telling me is it Donald Trump that bring the market to this level now? Because back then as well, right, there was some saying that it was Obama that actually created the economy and Donald Trump just happened to write on it. So are you telling me now that this is the works of Donald Trump and Biden writing on it? I will leave it there. But incredible. This is really incredible. All right. This is since 1983. Wow. The jobs report also blow out expectation. I mean, seriously, I was expecting about 700 to 750,000 jobs, but the numbers of non-farm payroll on last Friday was incredible. Was really wow. It went up to 916,000. My God. I mean, seriously, this is really incredible. I mean, oh wow, it's really almost a million. Think about this. All right, so it was from leisure and hospitality. I thought the economy is not reopening yet, but apparently it is, seems to be. And that's why, and even construction, okay, construction go up, I can understand, but leisure and hospitality, okay. So that is whereby I'm very impressed. Honestly, well, under this Biden, it seems that there's going to be a much, much more crazier bull coming up, right? It seems to be, right? So that is why I want to share all this information with you. All right, and because of this, it's a blowout job report, right? So obviously the market now is expecting the April month to be very powerful. They expect the period will be so strong, and Jerome Powell will be speaking again on Thursday, okay? Because the Federal minutes will be on Wednesday, Jerome Powell will be on Thursday, and it expected to be, another day whereby they will probably manipulate the yields again. So traders, again, you're going to have a lot of good time coming out if you're on the long side of the market, okay? This is what I'm seeing right now from the financial news, okay? All right, then JP Morgan came in and revealed big Bitcoin price prediction as Bitcoin and crypto market surges towards $2 trillion. Wow, $2 trillion. So basically, right, you can see it's a bull market and it went up just this year. That's from the bull market, right? It's a 500% run. Okay, it was 10,000 just 1 year ago. Now it's already at 60,000. It's already 500% run. I mean, seriously, that is how it is. And now the analyst in the JP Morgan side is looking at 130,000. Now, if you attended last Saturday and the previous Saturday, I did mention that the Bitcoin could really scale all the way to about $170,000. It is possible, but not. I mean, if you say going by the rainbow chart I mentioned, but of course that is only expectation. Doesn't mean it will definitely be there. But if you look at it from the long-term view, it is very, very possible. So JP Morgan says that, right, this is going to be really incredible. Although high volatility will be the headwind, but still, end of the day, they're still looking at further upside. Okay, they're still looking at upside, right, to basically match gold trading. Apparently, this is what JP Morgan say. And this is how the chart looks like for this Bitcoin. You try to test 60,000, then it pulls back, then it's trying again. So the all-time high is about 61,700 for the Bitcoin cash that is not is in the market. So they are saying that, right, with this is going to assist, and more companies, okay, very more companies like PayPal, they are all coming in to get involved into this Bitcoin transaction. Okay, so traders to stand by. It seems to be the big boys are all looking at the BTC to go even higher, right, much higher than beyond. Okay. Now, of course, we can see that the China digital yuan has started testing, all right, apparently across borders, in fact. So apparently now Hong Kong's residents are able to actually register for a digital wallet, and they can transact up to 50,000 yuan. Okay, that is pretty interesting because, you know, this is really opening up. And it's really going to accelerate the role of the virtual yuan, because now, as I say, they want to stem up away fiat currency. They want to go to digital. So that is whereby this is why I'm saying cryptocurrency is here to stay. And if China, one of the biggest, if not the biggest economy, is doing this, it's just a matter of time itself. Cryptocurrency will be coming to our life. All right. In fact, in China itself, if you want to buy ice cream or buy vegetables, you need to use, you need to scan or digital transfer. You no longer pay by cash. So that's why, if you're still thinking that the market is going to be staying on the normal fiat currency, I think you got it wrong. You have to move on for digital currency. All right. Now, of course, which digital currency is another thing, but there is on speculation say that, right, who knows that the US is going to challenge, okay, the China want to challenge the US for the US dollar, right? US dollar, as we know, is a global currency. And now with that happening, it seems to be that China is trying to stamp its authority on this. So traders, regardless of that, remember, it's time to move on. You can't stay there perpetually, all right? So traders, this is something that you need to take note. All right, to just, everything was all positive until this morning, Roy Blunt came in and said that, nope, Biden is a bit too much. You wanted $2 trillion, that's too much. So he says that, no, it should be about 615 billion or 30%. So according to him, he said that this is a little bit too much, okay? So that's a little bit dampener in the morning, but the rest itself, right, is all pretty positive. So the thing is, he says that, right, this the plan is reasonable, is acceptable, but the amount is ridiculous. And of course, several other Republicans, by the way, he's a Republican too, all right, says that, right, this is not going to be receiving any Republican support now. But the thing is this, even it's a 50-50, right, Harris Kamala will just come in and say, look, just make it go through. So end of the day is that even whatever you can say or resist, it seems to go through unless their own party, the Democrats themselves, doesn't agree. But obviously, I don't think anyone will do that. So guys, this is what is happening right now on the global market, okay? Global market. It's all important information because you want to know what the world is looking at. Okay, so at the moment now for the Dow Jones last Friday, you can see on last Friday, the market was not open, okay, not open, but you can see that towards the last part on Thursday, the Dow Jones went up, right? So that's why on Friday, you saw the US data was so fantastic, and obviously the market gap up even higher and went, up by 200 points. So this tells you that a little bit of manipulation is involved on Thursday already. So you can see that this is what we have shared again, that the S&P basically closed 1% higher. Just a review, just a refresher for you that why it went up and so forth. So the thing is this, everybody is very, very bullish now on the stock market, okay? Very, very bullish. So this morning, the futures actually gap up by 100 points after the blowout job reports. And of course, everybody is looking at around with this, nothing bad. COVID-19 seems to be so-called tamed down, okay? And of course, then the vaccination ongoing, it seems to be a good times going ahead. So you see that today from the morning until now, I have not stopped talking about good thing, right? Apparently, because this is what the media is saying. So when the media is, everybody is so positive and so bullish, right? I always tell people this, you just have to watch the opening price. If the market stays above opening price, generally well, the market is following. Now, if the market is actually trading below the opening price with all the bullishness in the market, then that's where you got to be very careful. This is how it works, okay? So this morning there's no Hang Seng, so I need to rush around. So I just follow through and then come to all the technical side, okay? So Friday, you can see there was Friday. We did not have the MAO because my children want me to bring them out, so I didn't have the MAO. So let's refresh what happened on Thursday. So on Thursday, the market opens right here, and that was already above the pivot one at 33,138, right? And the crazy part is this: when the Dow Jones came down, it missed the pivot one and rebounded, and that was a very classic buy. So once it goes above opening price, it was a buy, and the KSI was green, confirmed buy. So CCRY above OP, it was a buy, and it was that simple as that. I said many times, for classic trades, as long as the market is above OP and a pivot one, you just have to go long. This is actually applicable even for Bitcoin and Ethereum, all right? It is applicable. So let's see what happened on Friday, shall we? On Thursday, sorry. So on Thursday, when the market stays above OP, this is the pivot one, right? So once it goes above OP and pivot one, you can see right here. Sorry. Once it goes above OP and pivot one, it was a buy. So this was the first buy. Then progressively, if you still to buy in more, you can buy in over here. And of course, during the non-farm payroll moment, there was the big movement, right? That's where the non-farm payroll result came in. The Dow just rocketed all the way. So that is how it happened, okay? Now the question is this: with a big result like this, for the Dow, it should be up by 200-300 points. But at the moment now, it's up by 100 over points only. So the question mark is this all? Or is it because the market has already priced in? So that is another big question mark for you today for the market. We should come to that later, okay? All right, so now we're going to go into the technical side. Now today, we can go straight to technical because there's no Hang Seng today. Hang Seng is closed. I believe the Chinese market is also closed. Okay, so let's look at the Dow. Now this is the Dow Jones in the weekly, in the daily chart from using conventional, and it's very clear. All right, when it broke the MLP 2 days ago, it went up. Then the next day, MLP was here, right? The next on Thursday, the market continued to surge higher. So now today, the MLP will be somewhere around here, not drawn to scale. It's about 33,240 level. Okay. All right, so let me just put the MLP first. That will be 33,240 level. I repeat, this is not drawn to scale, so you need to do the proper calculation to get the best level. All right. So this morning you can see the Dow gap up expected, okay, and then now it's just fishing at the opening price. Now without the Hong Kong market available, China market available, likely today, the first part of the morning, the market will be pretty sideways. All right. So I repeat, likely today the market will be pretty sideways. And of course, now the thing is this was the previous high, then there was a next high, and then after that, and now a new high, and probably we are new all-time high. Let me just double check. The high on Thursday, the Friday, so-called the CDP, the CFD, sorry, is 33,388. Today's high is 33,381. Okay, it's just brief rest around there. We will see how it goes, okay? All right. In terms of this longer term, you can still see that my chart, I'm here, I'm going to show you again. Right, as long as the market do not pull back below my channel, okay, my channel here, the Dow is still okay. But we can see very clearly now with the numbers are getting smaller and tighter, right? By mathematical formula, the MA obviously will go closer to the current price. So it's pretty simple mathematics, right? When the range is far, the MA is further away. But as the price has to come down or get smaller, right, it's very simple mathematics. The MA will also creep towards it. So it becomes like the MA now look like, it's basically going up to the 45 degrees angle. And when the angle gets a bit too steep, right, and that is where when the market cuts it, okay, on profit taking, on stuff like that, two things will happen. Either the market finds a support to recover again, or the market breaks the level and come down. So this is something that you must take note. For the MA30, is agreeing to you, the MA200 is at 30,400. So from current level now with the MA200 is very far away. I repeat, the range between the current price now and the MA200 is pretty far away. In fact, it is the furthest for some time on the upside. So when that type of range get too far away, right, it does give a bit of concerning factor here itself. All right, but for the RSI side is whereby a little bit of worrying is still the so-called divergence, because you can see that the market is generally going up, right? But the RSI is actually going down, and it's seemingly every touch point it pulls back a little bit. So that's why there is a bit of concern about this divergence ongoing. So traders, you just have to take note. But still, until the market breaks at the moment now, is still pretty bullish for the general market. So this one, you just have to take note that I just mentioned to you. All right, despite whatever's happening in the market right now, you must follow the chart. Okay, if the chart says buy, you stay to the long side. Okay, this is very, very, very important. Okay, all right, so that is the Dow Jones right now. All right, look at the all-time high. Yeah, we have the all-time high chart, so we can see that. So all this level I just take away, it's no longer applicable. Maybe here, a little bit here for the sake of just putting in. Okay, there we go. All right, so nothing has changed on the long-term chart. The weekly chart, well, we do see that the body get a bit smaller. Now, usually the body gets a bit smaller means that there could be potential bit of exhausting. So traders just when you go long in the market this week, just slightly to go lesser than last week. Just go lesser, all right? And expectation-wise also reduce a little bit. Okay, just reduce a little bit. Okay, so my forecast chart seems to be telling me that the real big movement is still on the 26th of May. Will that really happen? Well, let's take a look and let the market decide then. Okay, so that is the conventional sharing. Let's look at the non-conventional, which are trade with the buy system. Now, this morning, the TWB system pretty clearly tell us about the Dow Jones movement. This morning, the opening price was just above the P2. So, of course, when the market broke P2, there was some initial selling, okay, initial. But because the KSI is green in color, right, every time when the KSI is green in color, shall the market go to KTR -1 to -3, usually the market will find a base, and that is where it will actually get itself supported. So if you look at the 15-minute chart right now, you can see that initially the Dow came down first in the morning. Then after that, it found a base around here, and then now it's trying to stay above the opening price. Now, I did mention to you, right, if the market is so bullish, then the opening price will be the key pivotal to watch out for. Now, there's on the M15, there's a TSCB right now at the moment at 33,352 level. So if the market stays above it, I do expect the Dow to continue to go higher. The Dow could be going higher, and the first TP level will be 33,491. So that means that we are going to see a new all-time high. But if the market bridges below the P2, which is going to break below the TSCB, then 33,240 could be the first support for the Dow Jones, which I think that there is a possibility for that to happen. So upside 33,491, downside 33,240. All right, this will be the at least for the movement for today. All right, with so little market ongoing now, we do expect to see something like that happening for today. Okay. All right, so that is the Dow Jones for this morning. Okay, then how about the NASDAQ? Now, the NASDAQ, as I mentioned to you, as long as NASDAQ found base at 38.2, you go to 50, and if 50 crosses, you go to 61.8. So apparently, it really all happened. It really all happened. So that's why this 38.2 is a very powerful thing. And because now it's above the 61.8, this Fibonacci cannot be used anymore. I must take it away. It don't be confusing. All right. So the trend line, obviously, you can see it broke the trend line. So I'm taking the trend line out again too. So no trend line. Then, of course, this support level, I'll take it away. This one, take it away. So now there's a new chart right now. Okay, so the thing is this, the question mark is, okay, now the market basically from the highest point recently brings down all the way, and now the market recover. All right, recover. And of course, it stays above the 61.8. So that's why it's pretty bullish right at the moment. So will this continue? Well, it all depends on the next wave, because you can see that there is a concerning factor around, oops, sorry, wrong color. Around here, there is a first resistance, second resistance, and third resistance. So it seems to be there is a, what you call a bit of triple top at the moment for these three areas. So unless the NASDAQ can prove its worthiness and go even higher, then if that really happened, we could see that you could see the NASDAQ going to, again, all-time high. But if this is going to be the triple resistance, 1, 2, 3, then if the market pulls back because of profit taking, then the base support should be around somewhere around here, this area here. And that is about 12,750 range. Okay, so this is the two range that we're looking at for this conventional. So traders, you may just want to take note of that. Okay, I'm just going to put it in just to remind myself about this artificial support at about this point here at 12,750. Okay, let's put it in just for our, okay, can you get it? Okay, so it is around there. So, all right. It's okay, moment, let me just screenshot this. Okay, done deal. Okay, here we go. All right, continue. So that is the NASDAQ. And the NASDAQ today for the TWB chart, this is still this the day chart. Is today opening price is actually between the two pivots. Now, very interesting is that last Friday, even though the Dow Jones went up, right, the NASDAQ hardly moved much. So that's why I suspect that there might be a little bit of profit taking this week, all right, on NASDAQ, just my personal take, because the market may be still emphasizing on buying the cyclical counter itself. So that is why I'm saying that NASDAQ may have a bit of profit taking in the near term, okay? That's the NASDAQ. S&P 500, S&P, you can see that instead of going downwards, it went through the triangle, so it break up to new high. So because of that, I have to change my chart drawing. Let me just have to redraw my chart, okay? So let me just show you how I draw it back then. This is where I took the high, connected. So I didn't take this away just to make sure that I got it correct. And I need to redraw this again. Take the highest point. Oops, change the color. Change it to blue color. Okay, here we go. And then I rejoin the high. And if I rejoin the high, interestingly, we can see something like this. Okay, so if I look at it now on the hindsight, okay, right, from this is the high. Okay, I project it all the way to the next high. It smack right here. That's where I joined them, right? So it's not considered as I'm not that it actually predicted that. It's more like we purposely put it there. But from this point, which is BMB, we project it to the next level. We can see that this is where we are now. That is whereby I got myself a bit intrigued. So which means that, right, would that means that there will be a midterm pullback soon because of the trajectory of this trend line? I'm not too sure. But still, to be safe, my MLP is placed there at 40.30. 40.30 is MLP, and the MA now is about 39.46 level. The MA 200 is very far away. It's about 37.16 level. So as I mentioned again, when the current price now is too far away from the MA 200, usually traders must be a bit careful. All right, this is whereby my personal take is this. So with the resistance right here that really project itself, and of course what happened on Friday, that we might be seeing a little bit of technical pullback in the near term. All right, it is very possible for a technical pullback in the near term. All right, so traders, you just have to take care of this particular trade, and that's why for S&P traders, this is also a pretty decent trade risk-reward ratio trade. Okay, a pretty decent risk-reward ratio. Okay. Okay, so let me continue. So with that, that will be the US equity market. Now, how about DAX, as we are always covering? Now, DAX, you can see that it's really on steroid, okay, because all this big money pumping in the system is definitely basically moving the DAX higher. So I'm not saying that, you know, wrong, but I've been telling you got DAX, there will be still upside to go. But of course, I did say that the DAX may see resistance at 15,000, which I'm obviously very wrong on that. So I would have to take my word that, wow, it seems that the money is bigger than what I can see there. So we were right when the market was at 14,600, we called for buy, hit 15,000, we took some profit, but now it's even higher. Okay, so if even higher, I'm gonna put MLP now at 15,110. All right, so that is the thing to watch out for. And the BNB is still there. BNB is still there. So the market stays above the BNB RL. That's why the DAX continue to go higher. All right. But the MA30, as you can see, the MA30 now is here, which is approximately at about 14,630. So it's a bit far away. And of course, the MA30, the current price now, and the MA200 is even further away. And if I'm not wrong, right, if I'm not wrong, this is the furthest ever for DAX, which means that now the current price now is way, way, way far away from the MA200. So when such a thing happens, usually by technical analysis, there will be some pullback pretty soon, but it's not immediate. You must wait for the change of colors. I mean, basically you must wait for the market to get weak and they show you signs of taking profit. Then the market may be coming down to the MA200 level. So traders, this is something that you must take note. I don't know when, but you just have to take note of that, okay? All right, so that will be DAX. Okay, so let's look at gold. Now gold, we can see, wow, okay, as I told you guys, gold went up last week. All right, pretty strong. When everybody was calling for sell, gold went up. So it's something that we can see, okay? So now the thing is this, on Business Time says that, right, Indian gold lenders cut tenure as they say that collateral is a problem and while price of gold goes down. And of course, on the other side, some say that because the gold crossed the 1700 resistance, so that means that the gold will be higher. So now two different camps, two different views. So we are not too sure what to look out for, but today there's something to take note. On last Thursday, Friday, the gold was closed. On last Thursday, it was a very clear cut, okay? The market opens above pivot 1. And I said this many times that once the market is above OP and above pivot 1, no matter what you tell me, is a buy. Correct enough? Correct enough. Right? How many of you agree is that? Okay, if you agree, please key the word agree right now. So I know you guys are with me. There are 90 of you. How many times have I said this? When the market is above OP, above pivot 1, I don't care what the market says, you just have to stay long. I mean, we have been saying this so many times ever since the start of this introductory of this TWB system until today. I have not once minced my word. All right. The only thing is that I'll just tell you to be more careful when you're long. Just take more profit as you climbs, things like that. But you never say that, oh, today is above OP and pivot 1, but today cannot long. I never say that. I always say the same thing. If the market above OP, above pivot 1, no matter how, it's always a buy. And this has been proven many times again and again and again. This is why traders, you must understand this. It is very important to follow the system. All right. So even though the KSI was red in color, even though there were blue bars at the bottom, it's pretty negative. But still, the point is this: as long as it's above OP and above pivot 1, it's always a buy. This is something that you mustn't forget. So that is why on Thursday, even though fundamentally people are saying that the market is going to go down, we are still telling you that follow the rules, okay? First, follow the rules. So the question is this: will this be the next up wave that people are asking me? Well, let's just go in details and we can explain you shortly, all right? So let's look at the let's look at how the chart works on Thursday. So once the market goes above OP, you can see that pretty clearly this is a BMB. It's a BMB followed by a color change. So it was pretty good. That's why the market goes up. Then after that, it pulls back, but it created another BMB at the same time. There's another one here. And of course, CCRY, it goes up again. So the thing is this one, basically, it did not really fail because the stop loss should be somewhere here. All right, if you got hit because of trailing stop, then you lost money. But after that, if you follow through and do the CCRY above OP again, look at gold. Gold went up again. So if you're talking about really want to go mechanically on this gold trading, you have 1, 2, 3 wins, and you have technically 1 loss, okay? So 4 trades, 3 wins, and the wins are all pretty decisive. I think that is more important. I mean, seriously, if you just keep on harbor on the point that we lost money on that day because of 1 trade, while the next 3 trades are all printing, then you really lost sight of things, okay? Because it's whereby I always tell people this. But I realize that the problem with this is that a lot of people, the first trade, they don't enter. Second trade, they don't enter a little bit. But the third trade, that is where it's here. They enter a lot. And when they enter a lot, their stop loss is placed at the wrong place. Or the stop loss, it was entered so much, right? They got fearful. They cut their losses. And then the next trade comes in. Instead of buying, which is what they're supposed to do, they cut loss. And that is where they got hit. This is very normal because First trade, people don't dare to go in, usually the case. Second trade, they play a bit smaller. The third trade, usually they play the biggest, and sometimes we can see this many times, the third trade is the one that usually slap you in the face. And after that, that's how you've given up hope, and then after that, the price goes up again. All right, don't you find it's very, keep on repeating, and we are always in this vicious cycle because we don't have the faith to enter regardless. That is the point. So that is why we are missing out here right now. So I really hope that traders, you can actually take advantage of this and remember what I have to share today. Very, very important, okay? All right, so let's look at the gold today first, okay? Now, this is gold price today, and this is something I need you to understand this. Let me just explain this to you slowly, okay? Let me explain this to you slowly. Okay, so first of all, we can see pretty clearly that gold price is now trading above the MA30, okay? So let's just revisit, okay? The last time when the market trades above the MA30, that was back in late March. As you can see that, okay? Then after that, the next day, okay, the gold price traded higher than the previous high, but eventually closed down. So this is the one that closed up. This is the one that closed down, right? And you realize that the trend of gold has been coming down quite a fair bit. So if the market stays below the MA30 by today's closing, then it is very clear gold should be going down lower. But if gold start to stay above the MA30 and close above MA30 today, then I'm pretty sure to tell you that gold may creep up, may go a bit higher. So the MA30 for today for gold is 1725 level. 1725. So basically, very seriously telling you that as long as gold stays above 1725 by today's closing, gold, in general speaking, should go higher. Okay, how much higher? I won't know. I'll let you know tomorrow, but at least it will go higher. But if gold close or trades below 1725, and evidently it's going to be low, closing below 1725 for some reason due to momentum, then that means that gold will be trading lower in the weeks to come. All right, how much lower? Well, it's possible to go back to 1676 level. Okay, it is possible for gold price to go back down to 1676 level. Okay, so at the moment now, just remember this: 1725 is a very, very important level to watch, and that's MA30. Now, this morning we already bought gold. Now, why do we bought gold? I think you should know why. It's a CCRY on a day chart. Now, look at the weekly chart. You can see that three times, in fact, for 3 weeks or 5 weeks, the market purposely tested 1689 and then rebounded. So is the 1689 so powerful? It is, because that's a 61.8 on the Fibonacci. And also evidently, we have seen it that every time when it tested 61.8 or the price of 1689, almost immediately after that itself, right, the gold price will recover. So that's why on the flip side, if gold do pull back down, then 1689 will be my target to take profit. If I'm shorting gold, I'll be aiming at 1689, and then I let the market decide over there. Okay, cool. This is very, very, very important. 1689 level. All right, for silver, you can see that I mentioned to you, if gold goes up, silver will go up. So silver went up, but the problem is silver now has actually have the MA30 trading below the MA200, and this is a death cross. A death cross usually means that the market will go down lower, but of course you can see the market resilient against the downside for silver. So is this going to be the last rally before the sell down? I don't know, but based on the MA30, it is now doing a death cross. So there's two takes on this. One, if the silver can break past this point, silver will change the whole entire momentum, and silver may go even higher, maybe to 26 level 30. But if the market just U-turn right now, then obviously it might be going down to the $23.50 range. That is what I mentioned about this silver in the long term. All right, so traders, please watch the silver price and the gold market, all right, closely. Okay, that is for silver. Okay, so let's look at the silver gold market for today. Now for today's gold, let me explain this to you. Today gold opening price is between the two pivots, right? Pivot 1 and pivot 2. But because the CCRY on the day chart, so the market should be likely going upwards. But there is a resistance there. There's resistance there about 1732 to 1734. These are the few resistance in the market. But if the market can cross 1734, then 1745 will be the first resistance, and that is the pivot one. Okay, but if the gold do come down, because the KSI is red, we can see right over here, and the red is quite huge because it's longer than the day before. And if gold comes down, then 1721 will be the very important support level. And of course, earlier I mentioned 1725 is the MA30. So if the market breaks 1725, that's the first ring of trouble. If the market break 1721 and close below 1721, that's it. There'll be more selling to come, and likely this selling may bring it down to the level I mentioned, 1676 level. Okay, so this chart is very important. We want to take a screenshot of this for today, for this just for today. So will you be doing all right? Okay. Okay, did I divulge something very powerful that the market got frightened of? Okay, so okay, let's continue. So we talked about gold just now, and I already mentioned to you guys about gold direction. So you guys can see my gold chart right now, right? Okay, let me just bring up my gold chart. Okay, so for gold, as I mentioned to you, if it goes down below 1721, then it may go down to 1676 level. I mean, that is a longer term chart. But of course, undeniable, as I said, there's a KCX at the bottom. So obviously there will be a temporary bottoming, which already happened too. But because gold has been going downtrend, so that's why the KCX now, you can realize it, the upside is pretty limited. The upside is pretty limited. So that's why I do say gold will go a bit higher today. But if it doesn't stay on fine, then of course, if it resume, then the last few rounds of selling have been pretty strong. So that's why I say that for gold traders, you just need to be careful for next 2 days. It could be a good time to buy gold based on rules, but if it fails, then the opposite will be selling, and you can actually cover back your money by shorting gold later. Okay, because as you know that the yields are actually still down there, right? If the yields are going up, then naturally the dollar will strengthen, and if the dollar strengthen, then obviously the gold price might be coming down a little bit again. Okay, so take note of that, gold traders. Okay, so that is gold. And Bitcoin, yesterday was Sunday, but it doesn't mean that we can't trade, right? So Sunday, you can see that for Bitcoin, there were 5 chance, okay, to trade on Sunday. 1 win, 2 win, 3 wins first initially, then 1 loss towards the back of the day, and 1 is still moving. So overall, out of 5 trades, we have 3 wins, to be correct, 4 wins, sorry, 4 wins and out of 5 trades. All right, it's still the same thing. All right, now I know that AIMS is trying their best to get they are linking with the exchange at the moment. Now they're doing their best. So again, at the moment, we wouldn't be able to advise you to when you can trade with AIMS. So we just have to wait, but we can actually take this time now to practice and learn. And hopefully, right, we can do it better when they are ready. Okay, so traders, you just have to hang on for a moment, no choice. Okay, but at least it's a good thing they took their time to do all this. Okay, right. So I come to this point whereby we have finished the MAO part 1. Now, for those who just joined us, this is the first time joining us, right? For those who attended last Saturday workshop, right? This is Cal right here. Our MAO usually cover two things, two parts. The part 1 is that we cover the usual stuff, which is including conventional charting, from global news to conventional charts to TWB charts. Okay, so that is the fun part. But of course, in life, there's always something that we can do. It's called something extra. It's called the alternate market analysis. Now, alternate means that, right, taking basically other people's charting view to put into here. And this is sometimes is a bit of distraction, because our side could be bullish on a chart, but because alternate market analysis may tell us to be a bit careful. And of course, when things happen, you say, oh yeah, I've seen this before and whatever. This is like, to make it simple, I put it this way. Okay, that means that day to day, you should be going to work. You should be going to work in driving your car and just do the normal routine and get a job done, come back home safely. Okay. But if the alternate market analysis tells you that today is not a very good day to drive car, and you know it, but of course, you still go with the flow, right? And unfortunately, you may get into a small accident, then your day may be dampened a little bit. So you say, oh, yo, I should have actually remembered that. So, but the thing is that, what if it didn't happen? What if the car accident never happened, right? Then you say that you're wasting your time, you didn't go work today. So this is where the paradox comes in. It's really very difficult to tell you or not to tell you. So that's why at this stage right now, I'm telling you guys, if you want to stay on, you stay on, because there's some sharing later that is going to be on the bearish side. So if you don't want to be affected by this, you can exit right now. Okay, I give you 10 seconds. Okay. So now I wonder why. Whenever I say this segment will be, it's time to exit, right? I see the numbers of viewers actually go up. I mean, normally, yeah, every time I say this part, the viewership just go up. Incredible. I don't know why. You all know that this is the time for doing this. Okay, so since you are staying on, let me continue now. Now, this is what I want to share with you. This is again from Norman Trader. Now, his view obviously is very bearish. He's very bearish by current point now, because obviously it's really beyond acceptable range. But again, market can go higher than you can think of. So this is basically taking the S&P 500 that's moving above the 200 MA, and with this indicator USHL, I really doesn't know what is it really represent. I have no time to really analyze it. So I'm going to bring what he says and bring it into you now. So he's saying that, right, 94.39% of the SPX, which is the S&P component, are above the MA200 MA. Okay, so that means that talking about the market now, most of them, 94% is way above the MA200. Okay, which is one of the highest extension. Okay, yet these data coming with the weakest new high and low rating. Okay, so what I'm trying to say is this. I believe that the one at the bottom is the high and low, right? So which means that if you look carefully, when the the current price at 94 point, the level means that, right, how many stocks are actually now just remove this. How many stocks at the moment now is at the percentage above 90% that's above the MA200. Okay, so let me just bring it in. Oh, sorry. Okay, so there is the first time, which is now at 94. The last time it was here, and that was back in 2013. Then after that, we're talking about here, which is back in 2010 and 2012, and here 2007 and 2004. So this is like the next time when this happened, where the market is above the MA 200 by 94%. So that last time was 2014, and now it's 2021. So 7 years later. But in terms of what he mentioned is the new high versus new low, All right, you can see that the level is pretty low at about 347. Now, usually it's much higher. You can see it's like at least 500, right? Usually it's around here. You can see that most of the time it's above 500 or more. This is like even higher. It's like almost 1,000. So this is what I'm trying to say is this, that the market advance and decline, so the new high and new low is not equivalent to what's currently happening now. Because if the market's above the MA 200, right, the new high should be higher. So the only reason can explain is because there's selective buying. That means that only selective stocks are being pushed and pushed and pushed, but in general, the market is actually fading off. So that is what he's trying to say. Because after that, what happened? After you see the last few times where the market hit 94%, 94%, the market obviously pulls back. All right. This is a thing that you must understand is factual. It pulls back. Okay. So at the moment now, he's basically telling you that with this at the lowest level now, okay, in terms of retrospect, and the market is at 94, it's just a matter of time. There will be a pullback soon. So that is what he's trying to say. But the question is when. That is the ultimate word. When will that be? So no one will know when, but traders, you can just stand by to watch this. Okay, stand by. All right. All right, next chart. Okay, this is the VIX indicator. You can see that why I put the cost of manipulation, because the last few months, whenever the VIX indicator, the RSI reading goes up to above 70, it's almost instantly the market will pull it back down. It's as if I'm telling you that as long as the market get a little bit worrying, the market will just pull it back. That means that someone is in control and make sure that the fire be put out ASAP regardless. And that's why it's very telling you that, right, this is very manipulated, okay? So what this means that, right, if the next time if the market goes up again, the VIX indicator goes up, right, and if you see the RSI going up, you don't need to worry. You just go the opposite side, which is to buy in the market, you'll make money. So this is what I'm trying to explain here as well, okay? Norman didn't really explain much on this chart here, but in my perspective, next time I see the VIX going up, right, and the RSI 70, I will know that just take the other side, which is just a buy into the equity market. Got the idea? Yeah. Okay. Now, interestingly, this one's very incredible. The Super Mario, I mean, we grew up playing this game. So apparently last year itself, right? Okay, this unwrapped, unopened copy of Super Mario was sold at 114,000. Just as a collector item, all right, unopened. But the thing is this, 1 year later, okay, 1 year later, someone has just paid 660,000 in auction. Oh my God. Someone just paid a 5-room flat for a piece of that copy of the Super Mario Bros. Oh my God. So think about this, guys. Really, if there's no inflation, there's no craziness. Obviously, there is. From 110, I mean, this piece maybe cost you about $20 to $50 in terms of cost, but someone have just paid 660,000. So when you see people going crazy with all this buying because they just have the money now, right? Well, you know what will happen next. But again, let me show this chart. It's quite interesting. This is a pandemic stocks versus S&P, and this is stay-at-home stock. Now, stay-at-home stock, obviously, we are talking about those like Zoom and stuff like that, right? Pandemic stocks are those stocks basically get affected. Now, you can see at the start during the March period, when the pandemic was ongoing, so obviously those stocks that is stay-at-home do very well, and those pandemic stocks are actually not doing that well. That's very normal. But now you can see that it's converging into one another. It seems to converge, right? So what does it tell you? So it tells you that, right, people getting basically no need to worry, and people are looking at to move on. And pandemic stocks itself are doing very well right now. So that's why traders, you can see that there'll be a point where they come together again. So that is where the next direction, where would it be heading? All right, that's what this chart should tell you. Okay, now this is the one that everybody is now talking about. This is the 30 years Treasury yields. All right, now this is back from 1990 to date, 2021, 31 years. Okay, so every time when they hit the channel, the yield seems to pull back. So now the yield for 30 years, not 10 years, 30 years has hit the top part of the channel. So are you telling me that now we're going to see that the market will be pulling back soon? And if you're going to pull back soon, that means that, right, the yield will come down. That means the equity market will go even higher, right? Isn't that correct? Yeah, that is one side of it. But if let's say it breaks above the channel, wow, then that will change the whole chart, because this is a 30 31-year chart, okay, a 31-year chart. So if the market really turned the other way around, then this would change the entire trend, and this will actually leave the market, leave the bond market even lower. Crash the market even lower and leave the yield higher, and obviously equity market will get hit. So this is a 31-year-old channel. The question is, would it be just a small movement like this? Because remember in 2018, when the yields went up across the channel, right? The stock market and the Dow Jones pulled back quite severely. If you don't remember, let me just bring you back into time. You can see this. A very quick one. Okay, you can see right now, this is the 2018 movement, right? So in 2018, when the yields goes up for the first time, the market took some profit first. Oops, sorry. Moment, apology. That's why I didn't fix the chart properly. Okay, so in 2018, you can see over here right now, the market basically came down, the first wave. So the time the Dow Jones was trading about 26,000, okay, and it came down all the way to here, then that's about 23,500, okay, that's the first wave. Then the market found some strength, it went back up again, but after that, the yields again climbed, and because the time the Federal Reserve wanted to increase interest rates, so from here, it dropped all the way down to 21,500 level, okay. So with that, that means that, right, would that repeat? So if let's say the yields, 30-year yields really go past 2.33% and go even higher to like say 2.5 to even 3%, then logically the equity market will fall. So that is the reason why he's telling you, Norman Trader, is about a high level, about the difference between the current price now and the S&P MA 200, and of course the new high and new low. But this one, the chart I just showed it to you earlier, that one came from another source, okay, to tell you about the market in general. So traders, you just have to be a little bit careful moving forward. All right, so watch the 30-year yields. If we go past the 2.33%, then who knows, it may repeat what happened in 2018, okay? All right, so this is the very clearly the 10-year yields that is moving is cyclical. And when the cyclical defensive stock went up, right, that's of course the yield also move up. So obviously this is actually a chart tell you that when the cyclical and defensive stock goes up, right, the yield usually also follow, because it's all the way have been following like a very tight over the years, okay? All right. All right, so that will be the end of today's sharing. I hope that this sharing today is good. Apology for the intermittent hang. I think the Wi-Fi went down. So I hope that you guys enjoy this session, and may you make money today. Remember, today Hong Kong is closed, so the market will be a bit muted this morning. But after that, when the European comes in, I expect the market to be pretty fun again. All right, so take care. Have a great day, guys. This is Cal signing off. Bye-bye.